All right, guys. So what is that? If you can see it, difficult because it's the most reflective metal on the planet. It's 1 ounce of silver, currently valued right now at around $22 an ounce, give or take. And it's also the topic of today's video. We're looking at a chart of the silver price, and in particular, I wanted us to kind of think about um, this silver versus gold scenario that everybody seems to talk about, and why I think you can't really argue that silver tracks inflation anymore. I think gold has been a much better place to store your money if you're interested in that sort of thing. But I'm also here to tell you that I think silver is a really good, recession hedge. And the reason for that is in the chart that we're going to look at today. So without further ado, why don't we just go ahead and jump in? I'm starting us off here on this like 100-year historical chart. A lot of this price action is irrelevant because the technology that is being used today way relies on silver in a much more heavy fashion than any time before. Of course, they figured out ways to get more efficient with it, but you see this rise in the 80s, which I think can only be attributed to the Hunt brothers trying to corner the silver market. And so I don't know if you can realistically look at that as like as and include it in any sort of technical analysis. That being said, it gives us kind of an upper bound as to where silver could go, and maybe explains why silver hasn't gotten back to that place. I think a lot of people will invest in silver thinking that it will get back there. Maybe it will, maybe it won't, but that remains to be seen. Anyway, back to the chart, and what I want to do, because I think much of this is irrelevant to today, as I was saying, and that the 80s run up and the following downfall, I don't know how relevant that is either. I want to pull us over to the 20-year chart. There's a lot of technological innovation that's happened within this 20 years, and so you have lots of data to look at, and all of this is within the context of technological innovation and the aftermath of the Industrial Revolution. I know how much some of you love that, but one thing I want us to look at, and getting us back to kind of the thesis here about why silver may perhaps be a better recession hedge than an inflation one, is let's just take a peek here at '05. You had this big run up, okay? There was probably a lot of doomsaying in the financial media. And while that's purely anecdotal and speculation, I haven't gone back and looked at it. I do know that now, and for the past few years, people have been screaming recession, recession. And it's usually only at the very end when people, even the people who are saying there's not going to be a recession, have capitulated, that you actually get one. And so what you had was this run up, okay? Doomsaying, perhaps the media. Maybe silver just hit a stride there. Who knows what could have really caused this? It was probably multifactorial. You had some consolidation and then another run up when it was starting to look like and feel like in the economy that the recession had been confirmed. And then, of course, you had the '08 meltdown, where this clearly, to me, would mean that people are basically having to sell their silver and their precious metals, or maybe their silver stock, to get money to pay their mortgages or whatever other problems they may have coming up in their life. And silver bottomed here, right around $14. If you looked at today's price, it's really not that much appreciation comparatively. Say you had put your money in the S&P or whatever. But here's kind of where things get interesting. You had the bottom, and then silver ran up like it hadn't ever, besides what was clearly market manipulation from the Hunt brothers. Now, you could argue the right and wrong of what the Hunt brothers did. I think a free market should be free, but it is what it is. But this is the highest price point that silver has ever seen, barring upward market manipulation. And I'm sure if you're a silver bug, then you well know that futures contracts are used to hold down the silver market as a whole. And so my guess is that people started flooding into precious metals, and we can verify this by going and looking at gold here in just a moment. And then they realized, well, silver isn't as, in great supply as we might have expected. Now, I don't want any of you to think that I'm sitting here telling you that silver has a deficit, because the people that tell you that are wrong. There might be a deficit if you play with the numbers, but without retail investment, without people like you and me buying, there is no deficit. We actually have a surplus of about 200 million per year. And how much effect we have on the price of silver, I could not tell you, but because of the fact that futures contracts are manipulated to affect silver spot price, there's probably, a bit of friction in that regard. So all that being said, we saw this run up, we saw it get tamped down, and really ever since 2015, you've had what really is just a massive amount of consolidation. And you could look at this and you could say, well, they tamped it down, right? Like it ran up, it was getting, really, it kind of looks like it was squeezing, and they figure out something behind the scenes to ensure that nobody was going to lose their shirt on this. And we have another data point here in 2020. A lot of the same things were lining up like they were in 08, or rather 07. And then you saw a decent run up in silver here. In fact, it very nearly doubled in price. So taking those things into account and wondering to ourselves if we are headed into a recession, and I'm not here to predict that for you, right? If we are, and it is as big as people are expecting, and the layoffs are going to be forthcoming, then this price movement here between 05 and 08, it's a little curious, because although you had more movement before, maybe we're just super early, but you could look at this and you could still say, well, that lines up. And the other thing to think about, right, is, let's just go to the 5-year chart for a moment, is this really hasn't changed. Like here at the beginning, we're at $20, and here we're at 23. If you just drew a line through here, I'm pretty sure that would tell you had something of a moving average, right? And so what a lot of consolidation and very flat price movement is usually met with is a violent movement upward or downward. The other thing to think about is, if I could draw on this, and you are interested in technical analysis at all, you would have a fairly large descending wedge, okay? This line still has a long way to go before it touches this one right here, and the trend line at the top is usually the line that has more power to it. So if it breaks through that, you've got maybe some upward price movement coming. But essentially, if you were just to think about a triangle being formed here, and when that triangle meets, you're either going to have winners or losers on silver. Then, push is going to come to shove relatively soon. So real quick, and we've kind of talked about a lot of what I think is going to happen here, and the reason that I think silver is going to go up is primarily because of the fact that it can't remain this low. Retail being involved, it might not be the supply constraint that a lot of people think it is, but it's still moving silver around. It's still making it a little harder to get it from the miner to the, let's say, the solar panel manufacturer that needs it. But let's look at gold just very quickly. So sorry for the blip. I had to pop over and find a website that actually showed the price of gold. And this one does, and it actually shows silver and gold side by side, which is actually better than what I had planned. So, and it illustrates my point very well. Gold has outperformed silver, and inflation, which has really run rampant since the years of Ben Bernanke and Federal Reserve ZERP monetary policy, you can see ever since the '08 crisis, there's been a divergence in the price of gold and silver. And I think it's for a lot of reasons. BRICS nations, I think, have driven a lot of this recent price movement. I forget exactly when it was announced that they were going to try and do, it was a gold-backed yuan or whatever, but they're trying to make that gold-backed currency with BRICS. I think that's where you're seeing a lot of this divergence. But really, it's been happening for a long time. Silver has not kept pace. You see a rough correlation in the price movements, but silver never gets as dramatic a rise, and it always gets the same level of decline in pricing that gold does. So, you might say it's a great time to invest in silver because eventually these two lines will converge again. But history, the recent history anyway, has shown us that that may not necessarily be the case. However, what you do see, okay, here when we look at the recession, is that when things got bad, and the recession, we were in it and we knew it was happening, things got bad here, okay? Nobody knew when the recession was going to end, and silver actually went up above the price of gold. And so while gold may perform on a more long-running basis than silver, what I think you can actually expect is for silver to have a run-up in price, not because of supply constraints and not because the gold to silver ratio is just at a crazy divergence right now, but because in recessions, silver seems to perform. Do with that what you will, but as for me, I'm going to continue buying this wonderful little metal. And if nothing else, I have some shiny stuff to look at, and it'll probably maintain its value fairly well. So, all that being said, thanks for tuning in. I appreciate it. And I hope that you had a wonderful week and that this was a good start to your weekend. Thanks again, everybody.